Thanks for joining us for Issues and Answers. I'm Ian Boyne. Today we speak to Jason Morris, who is the Vice President of Scotia Investments, and he's well known as a financial analyst. And he has been making a presentation recently about the economy and about the trends in the economy, and we speak to him about his views on that matter. We thank you for your company today. Jason, good to have you.
Thanks for having me.
You have been making a presentation on the economy in which you have pointed out that a number of things are moving in the right direction. Could you expand on that? Why are you bullish about the Jamaican economy, and particularly the macroeconomic path that we are undertaking?
Well, I wouldn't go so far as to say that I'm bullish. The objective of my presentation is essentially just to outline the opportunities for growth. So what are the things that are actually happening positively in the economy? That's the main focus.
Yes.
I think we pretty much know what the challenges are, so I'm just focusing on what are the opportunities. So it's not that we are without challenges,
Yes.
but it's just that there are some opportunities that have been overlooked, so to speak.
What are these?
So just looking at the budget and the IMF program itself to start out, obviously, it's a very challenging target from the very beginning to attain a 7.5% primary balance target. Very challenging. However, if you look at how the program has gone so far, tax revenues have actually been growing relative to last year. If you recall, back in 2012, September, tax revenues were growing at a rate of only 1.6%, which was the lowest in 20 years. Now, April to January 2014, it's growing at 9.9% over last year. So it's not that tax revenues aren't growing, but they're not growing as fast as we need them to grow to meet the target. So essentially, because tax revenues are not growing so fast, what the government has had to do is to come with a supplemental budget whereby they now estimate that tax revenues will decline by almost $16 billion relative to budget. However, what they have done is to cut expenditure by about $19 billion, $10 billion of which is through interest expense. So the result of all of that is that the primary balance target that the government had initially crafted, which is a roughly $111.5 billion, we are still on track to meet that, despite the fact that it's still very challenging.
We're on track to meet that.
Well, we are on track so far, based on the revised budget numbers. So,
so you're not pessimistic about our meeting the fourth test of the IMF?
Well, I think
not pessimistic about that.
I'm not pessimistic, but I think that it's still going to be challenging because we still have to hit the revenue target, and the revenue is actually the problem in this instance, tax revenues to be exact. So as long as the government hits the revised numbers, then obviously we'll meet the IMF targets for the end of March. Needless to say, it's still a challenging ask because April to January tax revenues were up roughly $21 billion over last year. It's speaking about an economy that didn't grow by more than 1% during the financial year. So it's a very challenging task, but I think that we have definitely given our best efforts to try and hit that target, and we're going to need to continue doing that for the next 3 years.
Okay. You were mentioning the other positives.
So that's the first thing. I think the second thing that we need to look at, if we were to look at the balance of payments, which is the reason why we have the IMF in the first place, because we simply didn't have enough reserves to back this, to support the cost of the imports that we utilize in Jamaica. So if we first look at the foreign direct investment, on average prior to the 2008 crisis, foreign direct investment in the country was about 800 million US per year on average. 2008 we had an outlier, we got roughly 1.4 billion, but that's because of a 700 million USD inflow from the lasses Clico deal. So if you exclude that, we average roughly 800 million. If you look at 2011, we only had roughly $218 million USD in FDI flows, coming from an average of roughly 800, which was the lowest in more than a decade. Fast forward to 2013 and 2014, FDI flows is expected to be roughly 440 million USD at the end of the 2013 calendar year. So that shows that the dip that we saw from the highs previous to the crisis, we have actually stabilized and we have started to creep up. So this is going to take time to actually rebuild that. Now fast forward to the net international reserves, the NIR is at its highest level in 14 months. So again, we had roughly $2.8 billion at its peak. We fell down to below $1 billion, and now we are just about 1.1 billion, which is the highest level in
the highest level in 14 months.
So if you were to look at it on a chart, you show that we fell, we scraped along the bottom for a while, and when we start to slowly creep up. However, obviously, to actually get the NIR on a more stable footing, we actually need to grow and produce our way out of it.
Yeah.
Which we
haven't
been able to
on
do
the
yet.
growth issue after. Jason Morris is telling us about some of the positive things taking place in the economy, what the indicators are, and when we come back from our short break, he will continue. Welcome back. Vice President of Scotia Investments, Jason Morris, is here with us. He's talking about the positive indicators in the economy. Jason, you may continue.
Yes, so I want to return to the budget, right? Because there's something very significant that is happening there. So recall, the 7.5% primary balance target is very challenging, and we have to consistently meet that. It's a challenge to meet it, but based on the revised budget numbers, we should come very close to meeting it, if not meet it. However, what has been overlooked is actually the budget balance. Now, 4 years ago, Jamaica had, so that's the difference between the taxes that you collect and the money that the government spends. So that gives you the fiscal budget, or the fiscal balance, which is the budget, right? So 4 years ago, we were running a deficit of 11.4% of GDP, one of the highest in emerging markets. Fast forward to the end of March, and if the government hits the revised supplemental targets, then for the first time in 18 years, we would have hit a surplus in our budget. Remember, 4 years ago, 11.5%.
11.5.
And if we come anywhere close to what I suspect that we're going to come out to be, is either going to be a balanced budget or a small surplus of 0.1% of GDP. Now, if you look at Jamaica, as a country that has a massive debt ratio, roughly 140% of GDP for this at the end of March 2014 estimate, and look at the budget deficit. Our budget deficit compared to other countries around the world, on average, it is countries that are rated BBB, which is an investment grade credit rating, that actually is running the type of deficit that we have. So the program has borne some fruits, because our budget is now better than many countries around the world, because we are almost like an investment grade country as far as the deficit is concerned. Our problem, though, is that we have a massive debt, and so we have to consistently still deliver on the fiscal accounts to ensure that confidence can be returned in the fact that we're not going to go down another road of trying to default on it.
So you strongly support the fiscal rule legislation?
If you're speaking about wanting to get medium-term growth, which is going to be based on confidence and people being able to plan, it is absolutely critical. Without it, I don't see how we move forward. So all the structural reforms, all 20 of them, including the fiscal rules, that were enacted from last year when the IMF program started to the end of March 31st, all of them are extremely important. If we're trying to look for how we're going to get growth, what's the secret sauce to get growth, it really is more hinging on these structural reforms than meeting any single revenue target or tax target.
There are those, Jason, who say that depending on economic fundamentals alone is misguided, that we need some stimulus now, we need some incentives to manufacturing. How do you respond to those voices?
Well,
you guys putting all the emphasis on these economic fundamentals, as though that will create any magic.
Well, there's no magic. I mean, if someone is...
Claude Clark wrote a couple of weeks ago, logic, not magic. How you respond to these views?
Well, all you need to do is look at any emerging market country right around the world and see those who had the problems that we had, what did they do, how did they come out of it. So there's a lot of talk about stimulus. The stimulus for Jamaica has to do with the structural reforms that we haven't had in over the last two decade and a half. That's our stimulus. We cannot afford to go and give people money to spend and call it stimulus. Why? Because we don't have any resources to draw that from. For us to actually do a physical stimulus program, we would actually need to go and borrow the money. And borrowing money would just put our deficit down again and increase the debt. But there's stimulus that can be had from doing certain reforms. So when you look at things like the doing business reports, the latest doing business report, that says that it takes roughly 135 days to get a contract from the time when you make the application to when it's approved, 135 days. If you want to, when you look at Jamaica's tax system, we are ranked 168 out of 189 countries based on that survey. If you're speaking about trying to get a land title, the number of days that it takes. So these are the things that we need to actually do to actually stimulate economic growth. It won't happen otherwise, because if you look at foreign direct investment flows over the last decade, so go back prior to the crisis in 2008, look how much money came into the country.
True.
None of that has been converted into significant growth. And the reason for that is Jamaica has a very low absorptive capacity of capital. So no matter how much money comes in, if a third of our employee labor force is unskilled, it means that when the money comes in, it's just going to flow back out. If we don't have low electricity costs, it means that our manufacturing sector is going to basically be focused on domestic demand rather than export-driven demand. So these are some of the critical issues in the economy that have to be fixed. And the structural reforms that the IMF has basically have us embark on are the way that's the solution to getting growth over the medium term. So I know that we want growth in the short term, and there are things that the government could do better in terms of speeding up the ease of doing business. However, the medium term will look a lot better if we stick to the program, get the reforms done, and basically set the pace for the private sector and our public-private partnerships to stimulate growth going forward.
Just a final minute. Many are concerned about the exchange rate. What's your comment about that? The dollar moving. What's your comment?
Well, I think I outlined what the problem is, what the problem and solution is already. Okay. The FDI flows, which were battered, and the NIR, which was battered, are still remain very soft. However, they have stabilized, and as long as we begin to right-size the economy to generate and stimulate export-led growth, then that is what is going to reduce the pressure on the exchange rate.
Not any artificial intervention by the government.
Well, artificial intervention will solve some short-term issues in terms of supplying enough flows to those in the market that need it.
Long-term solution.
But over the long-term, medium-term, what we really need is for us to actually produce our way out.
Yes. Thanks very much, Jason Morris, Vice President, Scotia Investments. We thank you for having joined us for another edition of Issues and Answers. Until next week, Boyne wishing you a pleasant day.